Hello and welcome back to the program. Let's start with a quick recap of Friday's session on Wall Street. All three major indices finished higher, with the Nasdaq closing at 26690, the S&P 500 at 7757, and the Dow at 54036. Markets were closed over the weekend, so those prices are locked in. But the real signals were at the individual stock level. QQQ was up 0.84%, Nvidia gained over 2%, Tesla rose 2.5%, ARKK jumped 4.68%, and the Bitcoin ETF was up about 1%. What's particularly noteworthy is that ARKK and IBIT moved up together, which tells us money is flowing into both innovative growth names and Bitcoin exposure at the same time. That's a clear sign that risk appetite is running high. Let's dig into some of the standout movers. First up, Road, which surged 21% on August 7th. We've verified that move. The drivers include rising expectations for infrastructure spending, Raymond James naming it a top buy pick, inclusion in the S&P Small Cap 600 Index, and an acquisition that gives it exposure to data center construction. The upstream logic here is that government and large-scale project investment is accelerating, which should feed into demand for smart city and data center-related equipment. For A shares, the mapping direction would be the infrastructure chain and data center supporting sectors. Next, FLR, the engineering and construction firm, rose nearly 17% on August 7th. Second quarter revenue came in at $4.3 billion, up 9% year-over-year. Adjusted earnings per share were $0.91, more than double from a year ago. New orders reached 6.1 billion, and backlog is approaching 27 billion. They also sold a stake in a Mexican joint venture to optimize their portfolio. The engineering and EPC cycle is clearly picking up, and for A shares you can track the energy infrastructure and large-scale engineering sectors. Then there's AXTI, which rose nearly 29% over 5 sessions. Second quarter results blew past expectations. Adjusted EPS was $0.19 versus expectations of just $0.07. Revenue was $47.59 million, well above the $34 million expected. The key driver is strong demand for indium phosphide products in data center optical communications and AI infrastructure. That's a powerful signal from the upstream of the optical communications materials chain. Now let's look at the broader macro picture. The 10-year Treasury yield is at 4.66%, down from 4.745% earlier in the week, a decline of about 9 basis points. That's a modest loosening in liquidity conditions, which supports valuation recovery for growth stocks. The VIX is at 14.90, down nearly 7% on the week, and it's now in the greed zone below 15. Market sentiment is calm and leaning optimistic. The dollar index is at 99.60, below the 100 level, continuing a weak dollar pattern that supports emerging market assets. WTI crude is around $78 a barrel, down 3.7% on the week. Soft oil prices reflect moderate demand expectations and help ease inflation pressure. Spot gold is at $4,399, up 6.8% on the week. Gold strength reflects both safe haven demand and the market pricing in a potential rate cut path. Putting it all together, we're in a structural risk-on environment. Capital is concentrated along 3 lines: AI, infrastructure, and gold. Volatility remains low, but this is not a broad-based rally. The conditions that would invalidate this view are the 10-year yield breaking back above 4.75%, or the VIX spiking above 20 in a single day. If either happens, the risk-on thesis is broken. On the currency front, the onshore dollar-yuan rate is at 6.7482, and the offshore rate is at 6.7425. The offshore rate is slightly stronger, and the yuan is moderately firm. The exchange rate has been basically flat over the past week. In a weak dollar environment, depreciation pressure on the yuan is limited, which is a positive for foreign capital flows into A shares. On US-China trade and tech restrictions, there are no verified new major events today. However, our market structure analysis flagged potential U.S. tariffs on polysilicon and restrictions on Chinese optical transceivers. Those reports are unverified at this point, but if they materialize, they would impact the solar and optical communications sectors. For A shares, we expect a higher open next session with a probability that's fairly high. 3 reasons support this. First, last Friday A shares rallied on strong volume. The Shanghai Composite closed at 3940, up 1.02%. The Shenzhen component rose 1.42% and the Chinext gained 1.35%. On a weekly basis, the Shanghai index is up 2.81% and Shenzhen is up 5.39%. Second, U.S. tech assets all strengthened overnight with QQQ, Nvidia, and ARKK moving higher. Third, the VIX is low, the dollar is weak, and the yuan is stable. The conditions that would invalidate this are U.S. futures turning lower during Asian hours on Monday, or the offshore yuan weakening below 6.78. In terms of sectors, the first direction to watch today is optical communications and semiconductor materials. AXTI's indium phosphide demand surprise has been verified, and the AI data center optical communications boom is transmitting up the supply chain to materials. A-share optical module and optical materials names have a clear mapping logic here. The second direction is power equipment and data center infrastructure. AI compute expansion is driving long-term demand for power infrastructure, and this sector has been attracting sustained capital flows recently. On the risk side, avoid stocks with high short interest ratios and high-flying theme stocks that have already run up too much. In a correction market, stocks without fundamental support become easy targets for short sellers. Also, if sectors that rallied hard last Friday gap up too much today, be careful of a fade. One sentence to sum it up: weak dollar combined with low volatility points to a higher open with a firm tone for A shares, with optical communications materials and power equipment as the 2 leading lines. Our probability assessment for today is 40% up, 45% sideways, and 15% down. That's all for today's program. Thanks for watching, and we'll see you next time.